For a quick service restaurant, Chipotle is having quite a remarkable growth story. Taking a look at shares of CMG, the stock gaining more than 320% in the last 5 years. A new note out from Citi breaks down the recipe to Chipotle's earnings success and what investors can expect ahead of the company's fourth quarter and full year 2023 results, set to report after the bell Tuesday, February 6th. The analyst behind that call joins us now, John Towers, Citi Director and Restaurant Analyst here. John, great to have you here with us. So what is the all-important guacamole attachment rate and all of the other core metrics for Chipotle going to tell us about the strength of the consumer as well as Chipotle's positioning within the wallet or appetite?
Yeah, Chipotle. Thanks, Brad, for having me. Chipotle's been doing quite well. The fourth quarter is likely going to end on a very strong note. At least the high frequency data that we can keep track of using third-party data as well as Citi's own internal credit card data for the industry suggests that the industry was okay, but Chipotle likely outpaced it on a footfall basis into year end. And the simple recipe here is just doing more of the same in terms of satisfying the customer with high throughput, a lot of food on the plate for a very reasonable price point, and occasionally new product news, weaving in LTOs. For example, in the fourth quarter, they had carne asada, brought that back to the menu. Last year in the first quarter, late first quarter, you saw them bring in chicken al pastor, which was, according to them, their most successful limited time offer ever on their menu. And I think we should just expect more of the same, no matter the backdrop for the consumer going forward. And I think what's important here as well is, while many others in the industry had been seeing some softness with respect to lower income consumers spending at stores, Chipotle's actually been seeing that group do remarkably well when visitations to their locations and spending at their stores. And I think even though we might be heading into a choppier environment in 24, Chipotle's likely going to continue to see share gains at a store level basis, as well as through expanding accessibility through building more and more stores in the U.S.
John, it certainly sounds like you think they are really at an advantage compared to some of their rivals out there. I'm curious, though, in terms of that weakening consumer, has Chipotle started to see any sort of trends of a trade down here? And then when it comes to pricing, right, that has certainly been an issue here, or I should say really a focus of so many companies over the last several quarters. Are you seeing, or do you expect to see any sort of pushback on the recent price increases?
So they have signaled that in 2024, they will be lowering or taking a lower level of pricing that they've seen in the past couple of years, in part due to the fact that food cost inflation is coming down. Labor inflation, at least in absolute on a percentage basis, likely going to be in that mid-single digit range in aggregate. But the availability of labor has improved quite a bit, particularly relative to 21 and 22. They have not really seen much by way of pushback from the pricing that they've taken. I go back to the idea that, you know, they do have very good value on the plate when you talk about the heft of the amount of food you can get relative to other fast food or limited service occasions. They do a pretty nice job of providing a lot of food for the dollars. And, you know, when you think about 2024, aggregate pricing will likely be influenced, obviously, by wage rate increases across the U.S., but in particular, California, where you're seeing the fast food minimum wage rate moving to $20 an hour. This concept has about 14% of their store base located in California, and the company has signaled the idea that they will take price to offset some of that incremental labor pressure in California. They haven't exactly articulated the magnitude yet as to what that will be, whether it's going to be margin or gross profit neutral in that market, but I expect a little bit more. But, you know, to date, they've seen a nice impact of, I think, other consumers trading into their brand. I don't know if they're moving from other traditional limited service players or if it's just them picking up from grocery, but they continue to resonate with high income, low income. Pricing hasn't seen much resistance. That had been a fear for some of the bears about 18 months ago, and that never really came to fruition. If anything, I expect them to continue to hit with some strong LTOs again in 2024, perhaps repeat what they did last year with respect to chicken al pastor. And you got to keep in mind, too, another lever that they have, others do have, but I would argue they, within fast casual, have one of the more robust loyalty programs. And that's another means to communicate value to the consumer, right? The idea of getting a free side of guacamole after a certain amount of spend, or do some surprise and delight along the way, that can affect the frequency and or check build for the consumer when they join the programs. And I think that's a nice way that they can offset any sort of aggregate weakness in the category.
John, talking about bringing value to the consumer, you also cover McDonald's, and we're closely tracking those moves ahead of earnings results. I want to talk about the value aspect of McDonald's, because in your recent note, you pointed out the fact that Taco Bell currently focusing on a $3 price point when it comes to ramping their value. How big of a threat do you see this potentially being to McDonald's?
Taco Bell specifically, McDonald's has got a wide lead when it comes to system-wide sales in the U.S., points of access in terms of their stores. I'm not as concerned that Taco Bell will go 1-for-1 with McDonald's. I mean, perhaps on the margin here or there, but similar to Chipotle, I think what McDonald's has done a phenomenal job of, particularly in the past 3 years, is ramping this mobile order ahead and loyalty program in the U.S. And effectively, the discounts that you can get through the mobile app are much different than what you can see in store on a regular basis. And I think that McDonald's is willing to, say, trade off a deal here or there in the app for the information that they're getting for the consumer, such that down the line, they can influence that behavior ahead in the future. So I am not all that concerned that McDonald's is going to lose directly to a head-to-head competitor within the limited service space on value. I'm more concerned that on the margin for the industry, the price-value relationship relative to the grocery channel, particularly for those that are more sensitive on their spending on a monthly or weekly basis, might end up impacting demand in the channel, right? The pricing that we've seen in cumulative levels across the space, close to the high 20s since the 2019, relative to what we've seen in the grocery space, I think that's going to be potentially a problem for the whole industry in 2024 and beyond, particularly if we see any sort of softening in the economy. And look, many of these operators have already spoken to it during the summer period, more so during the third quarter earnings call. The lower income consumer has been cutting back frequency, managing their check a little bit more so than in past periods. And I don't think that changed at all there in the fourth quarter, and it might even be picking up here to start 2024.
So, John, you don't see, I guess it's fair to say you don't see it really as eroding any of McDonald's market share then, just in terms of the fact that they are such a dominant leader and they have that loyal customer base.
Correct.
Yeah.
I would be surprised if McDonald's gave up share to direct competitors.
John Tower, always great to get your insight. Thanks so much for joining us here this morning, Citi's Director and Restaurant Analyst. Thanks so much, John.
Thank you.